As you guys can see, right, Tuesday, which was the day after we went live for the first time this week, was when we had, the low of week form across the board for most asset classes, right? That is not coincidence, right? It's definitely not, right? That's, you know, algorithmic, right? It was the day, which followed the day which we had the true week open being established, right? And this is why Mondays, right, out of every day of the week, right, Monday will be the day which is the lowest in probability. And this is due to the fact why is common sense, right? The true week open is yet to be established, right? Monday's range will usually be covered, during some day of the week. So as you guys can see, right, on Tuesday we had high impact news events, right, and we'll be going deeper into that. So I won't be talking about news events much right now, but we just had some type of volatility, enter the market, which was not a lot, right? And that's due to the fact of why. Yesterday we already had a current correlation, on the higher time frame cycle. Remember, we don't usually see sequential SMT, right, on 2 consecutive days. And also, tomorrow, what do we have? Tomorrow we have a US bank holiday, right? And these things tend to, keep them, like, these things come together, right? The fact that yesterday we had sequential SMT, intermarket sequential SMT within the weekly cycle, which is one of the most important cycles, right? For you, of course, right? It is the best way for you to gauge price action, is the best way for you to basically know what price is going to do most of the times, right? But due to the fact that yesterday we had that injection of volatility, and remember, the only time that news events matter is when we have sequential SMT, and the only time when sequential SMT matters is when we have news events. You can't have one without the other, or else price will, be lackadaisical or just do nothing, right? So here we can see that, right, we have price just, falling a bit due to the fact that we just had, some high impact news event within the marketplace. But pay attention to, this move. It's not a lot, right, compared to what we had happen, yesterday, right? It wasn't a lot. Yesterday was the perfect day, right? And if you guys remember, right, and this is not me just, like, you guys must be tired of me saying this, but right, it's not hindsight or anything, but I'm just saying it in case anyone, is watching right now that just decided not to watch the previous live stream, right? So here we have sequential SMT, right? It's always there. And I'm going to say this again, 90% of the time, right? And this is just to let you know that, listen, if you're trading a big account, a small account, this is your best bet. This is always there. There's no one else that can come every week and show you something that, they literally, Michael ICT, right? They literally made. Well, he don't make everything that he teaches, but right, you understand what I'm trying to say, right? This is our concept, our, not mine, right? Our, and it always shows up whenever the low of the week is formed. It's there. Whenever the high of the week is formed, it's there. Whenever Monday is the low of the week, what happens? Whenever Monday is the low of the week, 90% of the time, it will be the leg, right? The first leg for, what follows after within the sequential SMT, which is the swing low, right? So for example, here the low of the week so far for the Nasdaq is Monday. For the the E-mini S&P 500 is Tuesday, right? Here, what do we have? What do we have? This expansion, Right here, if you look across the board, you can see that, right? You won't see the precision swing point here, but it's there, right? If you compare this, which, we'll be doing in, when I look at some other charts or, another slide or whatever it is. This is a intermarket sequential. This is intermarket sequential SMT. Also, this is an intermarket precision swing point. Right? Do you understand? So here, right, we went live, remember, and then I said I expected price to go above these highs. We were looking at a higher time frame, but these are the highs that we had highlighted, right? This was a drawn liquidity, and it's still the drawn liquidity, right? Then what happened? We had price trade below the true open, create sequential SMT, then expand. That's it. That's the model, right? So first of all, remember, right, and let's go out a bit for this. First of all, we had the higher time frame sequential SMT, which was here, right? Between the previous Q4 of the previous month and the current first quarter of this month, right? Then what happened afterwards? Here, again, we had a lower time frame sequential SMT, which is also intermarket sequential SMT, right? And I'm going to show you guys how to get the highest probability trade that is there, right? The highest that you can ever get. And this is how you do it, right? This is exactly how you do it. So here, price traded below the true open. There was a higher time frame, right? There's an intermarket precision swing point, price expanded. This would not matter. The precision swing point makes no sense whatsoever if there is not a news event. If we don't have high impact news events, it doesn't matter. So do you understand now? It does not matter if you have high impact news events. Days such as this, right? Whereas there is no, sequential SMT here, it is what? Low probability. It is extremely low probability. Right here, right? This is not high probability price action right here where you see price. Like if you were supposed to trade, it should be here, right? Trying to capitalize on this move right here, which is a two-stage sequential SMT. Well, to you right now it's 2 stages, but it's actually 3, because we'll be going down in the lower time frames and looking at some more price action. So what are you looking for? What are you looking for? You're looking for sequential SMT, right? And it doesn't matter the cycle that you're looking at, right? It just needs to be 2 to 3 consecutive sequential / intermarket sequential SMTs, right? With precision swing points or precision candles. And once you have that, you don't need a level, you don't need a higher time frame period, you don't need a order block, you don't need a higher time frame breaker, you don't need any of that, because those things will not work unless this is here. Price will not reverse unless this is here. So you have no reason to not be making money. You have no reason to not be passing funded accounts. You have no reasons, because you now have the formula. You now have what you need. My son is making noise. My bad. You now have what you need. This is what you need. This is what works week after week after week, right? Why did I wait until here? Why didn't I go live here? Why? Because I knew that this would drop below this low, more than likely. And I didn't want to tell you guys that I'm bullish, and then you try to buy here and then you get taken out here, right? Here, what was there? Sequential SMT. What was on the higher time frame? Sequential SMT. It's always there. Whenever price reverses, it's there. 90% of the times, whenever we have, large price swings, it will be there. It must be there, or else you just would not have reversals, right? And if we have some type of lower time frame sequential SMT here, or cracking correlation, then obviously we're expecting pressure above these highs. So above these highs, we'll wait for another cracking correlation to see if price will reverse or fall back within the range. Here we have, right, and this is to show you guys how good it is. You don't need, right, to, for example, using this method, right, you don't need to be focusing on the S&P 500 and here, right? You don't need. If you have the S&P 500 and the Nasdaq, and then you see the correlation that you're waiting for, then you don't need to, be stressing over these, because as you guys can see right now, we're within a range. But right, this is our ultimate John liquidity here as well, right? But we're still within a range. But yes, this is our ultimate John liquidity. So if we see price fall here, right? We see price fall here. There's a correlation. High impact news event, boom, right? Aiming for these highs, right? That's the game plan, basically, right? These highs are too clean, right? And these highs are too clean, then these highs over up here are too clean, higher time frame, right? For us to not consider, right? For now, we see this as just price just setting up itself for, a perfect move. Whenever we see pricing consolidation, that's what you want to see, right? And it sounds weird saying that, but this is the type of price action you want to see. Unclear price action, due to the fact that what? Unclear price action breeds clean price action, right? And that's what it is. So we'll wait for, our confirmation, which is what? Sequential SMT, intermarket sequential SMT, and precision swing points, right? What else? SMT fills. And you know the rest. But those three are enough to build your models. If you realize we don't look at high time frame gaps that much, because what? If we don't have sequential SMT within that higher time frame gap, then it doesn't matter. It won't hold. It will not hold. And this is what you need to, drill into your heads. What makes price reverse? Sequential SMT. It's always there, right? If you get it wrong once, don't feel bad, right? Because some of you'll be getting it right 3-4 times in a row. And the one time you get it wrong, which is due to just, your human error, you blame the concept, which is not something that you should do. Which is, over time you'll learn to, understand and appreciate the times that you fail and just look at them as, opportunities to get better. So here we'll just dig a bit deeper into price action. So just to, put into perspective, right? How, right? We expect the price to go higher, right? When we went live, it was here. There was a true week open of the week, right? For me personally, right? Whenever the true week open of the week occurs, right? I don't pay attention to price action until until the true week open. Until the true day open. I think I'm using the wrong. Okay, let's use this right. Until the true day open, which occurs after the true week open. Why? Because whenever that happens, we have stacked true opens. Right? Whenever we have a lower time frame or a lower time frame cycles true open below a higher time frame cycles true open, right? What happens? Then we have, price just, will be deemed for expansion. Price will need to expand. But it's not just, okay, price just falls below and then we just buy. No, price falls below here. We have the S&P 500 piercing the low, closing below the lowest close of the previous quarter. Then what else do we have? Here we have intermarket sequential SMT. Right? here we had a precision swing point, right? On the higher time frame, we had higher time frame than this. On the time frame cycle than this, we had a intermarket precision swing point, right? Here we also have intermarket precision swing point. But the thing that occurs right here is when you look here, right? And we have this candle right here. And if you're wondering, right, these boxes, if you don't realize yet, right, they represent, the smaller ones represent the quarters of the day, and the lower one, the lower rectangles, represent the quarters of the week, right? So right here, right, this was the New York session, right? And the expansion leg, obviously, is going to occur whenever we have the high impact news event in place, right? That's what's going to happen. So sometimes it's either delayed, whereas you have the sequential SMT being put into place by a news event, or we have the sequential SMT already underway. So for example, here you can see that price fell below this low, but if you look at the Great British Pound, you see that price did not fall below its respective London sessions low, right? So this low right here, we had the S&P 500 fall below. That did not happen in the Great British Pound. And for those who need to see it, right? So that did not happen within the Great British Pound. Here, right? And whenever you see this is another thing, right? Whenever you see price action like this, whereas we didn't even get a swing low within the Great British Pound, just continued to go up, right? That is, a obvious sign that we will have expansion within the other asset class that you're looking at, which you're comparing with this, right? So here, the Great British Pound didn't even try to fall back. It didn't even pull back. Whereas we had the S&P 500 making the low today, taking out the London session, right? Then what? Then just expanded. So again, we're below the true week open. We're below the true day open as well. And this is usually what the low high of the week form, right? Vice versa, you'd see the high here. And it doesn't matter if it's on Tuesday, Wednesday, or Thursday, right? You just have to be above the true week open and above the true day opens, right? So here we had price pierce this low, right? This was a higher time frame cycles precision intermarket precision swing point. Price expanded, right? Price, then this right here, where you see me have this small red line, right? That is the true session open of the New York session, right? So this is the true session open of New York. Price traded below. And if you realize this candle right here, right, it was the base of this swing low, right? Which is important. This is the 50-minute time frame. Pay attention. The 50-minute time frame, this candle right here, right, is the candle to the left of the swing, of the bullish swing low. This candle right here expanded, became a gap. Then it is the candle to the right of this swing low. So this right here is not random, right? First of all, the time that it takes place on the 50-minute time frame, right? We have this right here, dawn close candle, open right here. Then we have had the swing point right here, price expanded, price came back down, perfectly, right, balanced with this candle right here, which would, actually be what an order block should be, right? Due to the fact that we have all of these, everything happening which was due to happen for a reversal, right? The time is right. We had high impact news events during this quarter right here, right? During New York. And if we had a high impact news event here, then we would expect what happened here to happen here. If we had a high impact news event here, right? For example, you're trading the Great British Pound, you have high impact news event here, there's sequential SMT here, in terms of the sequential SMT here, then you'd expect the same thing to happen right here. Bullish here, just because we have sequential SMT here, which is why we had the expansion. The news events will respect the daily and 90-minute cycles, right? Those are the cycles, right? The daily is the best, right? In my opinion, due to the fact that, right, if you're using the 15-minute time frame, you don't really have to be, just stuck looking at the charts, right? If you have something else to do, you can just continue doing it. Since lately, with my son, I have to be trying to find time, so I haven't stopped trading with the 15-minute time frame, right? So this is the best thing for if you're someone that doesn't have that attention to the charts, right? As some people that they can be looking at 1 minute time frames for minutes upon hours, right? This is perfect. So we had price trade here. If you look here, what's here? Liquidity, low resistance liquidity. Here, you can see that we have these equal highs here. So whenever you see this, like, listen, you never want to see equal highs and just be shorted, right? You can be shorting here, but once it reaches here, whereas, reaches climax, whereas it should reverse, it will. Once the time gets right, it will. And usually whenever, you have this type of price action where you have equal lows form and equal highs form or equal lows form, and price starts to reverse, right? It's just trying to get to the proper low, right? As Michael might say, the proper discount rate, right? Terminus, so it can reverse. After which here you see we had, price expand. Once it broke this high, this is a breaker right here. All of this is a breaker right here, right? The price fell back within the breaker and within the gap and just continued to go higher. So I hope that you found something useful from this. This is something that you should watch over and over if you're someone that tends to find this difficult, right? Follow it over, watch it over and over, make notes, and we will be, as you guys know, whenever you see me here, just completely rambling about something over and over, yes, we'll be going deeper, as this is a prerequisite for what we have coming. I hope that you found this useful, and hope that you have a wonderful day.